Gold slightly higher this Thursday, but still pressured by a looming Fed rate hike, even if the central bank remains divided on the timing of the next hike. Our next guest says the gold market is in need of a fresh new catalyst. Joining us now is Peter Hugg, Kitco's Global Trading Director. Pete, good to have you back on.
It's good to be here, Daniela.
So gold climbing here on a weaker dollar. Last time we spoke, you mentioned that gold was in need of a fresh catalyst, noting that a positive factor could even push prices up $50. Could that catalyst be this weak dollar we're seeing, Pete?
Well, it could be the beginning. I'm looking at where gold's traded over the last 4 sessions, and it's been bound between 1250, which is support, and 1260 resistance. We got over 1260 slightly this morning. I'd like to see a close over there before any momentum generates itself on the upside. But right now it's in a tight range. There is still some selling pressure from the large players on the premise that the Fed is going to be much more aggressive with raising rates starting in December.
Well, analysts I spoke to noted that this time of year is often a positive for gold, given that physical demand tends to pick up, especially in Asia. We have Diwali starting later this month. Could Indian gold demand be that fresh catalyst?
Well, I certainly think it'll benefit the market. I mean, I am not in the camp here that the Fed is going to raise in December. I'm still probably one of the lone voices out there that think they'll hold off in December. I mean, you have Chinese growth slowing. I don't see the Europeans tightening on their monetary policy. Certainly don't see the Japanese tightening on their monetary policy. And I mean, all you have to do is look at the stock market. I mean, it's, it got hammered yesterday. It's getting hammered again today. It's down some 160 points as we speak. I mean, in that scenario, I just do not see the Fed raising rates in December. So I'm actually very constructive this market. I'm not counting out the fact that we lose 1250 and see 1220 again, maybe 1230. But it's difficult for me not to retain a bullish posture on this market.
Well, I guess you're going against the grain here, Pete, because markets are pricing in about a 65% chance of a rate hike in December. But let me ask you, we have this pending rate hike. We have the U.S. election. What do you think would have more weight on gold prices this quarter?
Well, I think there may be some movement ahead of the election. I mean, I think Donald Trump is likely to lose the election based on obviously recent polls and some of the events that have occurred over the past week. I think Hillary is neutral for the market to slightly bearish gold, assuming the Fed gets some help from the fiscal side from the government, which I think Hillary might provide, which will give the Fed some room to raise next year. I think both candidates are bad candidates. I think both candidates will get nothing done. I think we're going to have a situation in the U.S. Where it's going to be gridlocked, and everything will be back on the back of the Fed. And in that context, I just don't see the Fed being able to raise rates. So I think the election coming up might create some volatility. But I'm looking more at the macro picture, the global macro financial picture. And to me, it does not look healthy. And I still think the U.S. stock market has some serious risks at these levels. And, if we start getting some serious selling there, that also will curtail the Fed's appetite to raise rates into a falling stock market. So overall, I'm very constructive this market, and I'm becoming more constructive as more and more big bank analysts are reversing their bullish calls. Now, 3 weeks ago, they were all bullish, calling for, $1,400 by sometime in 2017. Now they're all calling for $1,000 in 2017. And these guys have been perennially wrong. And I consider them a good contra indicator. And, the more and more of these guys jumping on being bearish, the more bullish I get.
All right, Pete. Thanks so much for your thoughts this Thursday.
You're welcome.
And thank you for watching. Stay tuned. We have II Traders' Bill Baruch joining us from the CME up next.